What's up, everybody? Hope you're having a good Saturday. Uh, Making another video here on Stock Doc. How about the graphics on the intro? Oh my God, Steven, my buddy, he's a beast. I joke with him. Maybe some of the viewers out in Colorado, where cannabis is legal, maybe they're just enjoying a gummy or a little marijuana and just kind of watching the intro for those graphics. My God, those are sick. If anybody's viewing here for the first time, I started dropping these videos on Facebook, trying to help people with some investing and stock ideas. And my buddy Steven, he's just awesome with the technicals and video editing and graphics. He was really encouraging me to start a YouTube channel, and I told him, hey dude, I don't have time to do all the work needed to run a YouTube channel, but if you do it, and if by any chance it were to go viral, you can take your share of the proceeds. And he's just been really putting a lot of work into this, and it seems to be off to a good start. We're getting some new subscribers. Several seem to be every day. And I just wanted to make a video today that's really capturing what this is all supposed to be about. And that's I'm trying to help people that have relatively low capital grow their money really fast. If you follow me on social media, you can tell I'm pretty liberal. My concerns are about the poor, and helping everybody have a chance to get ahead. And I'm on salary as a physician, and fortunately make a living that's comfortable. And so a lot of people might say, well, if you're investing as a physician, that's a lot different than what I would need to do if I were to invest or try and make some money in the market, because I may not have that kind of salary, or we don't have that much money saved up that we can invest. So how are we really supposed to make some money about this, and or with this method? And that couldn't be further from the truth. What I'm trying to do is set up a strategy to get you into some stocks that have a lot of flexibility, trying to help people find these stocks where we're at a relative bottom, and then get you into these stocks that they can grow very fast. And what I think is different in terms of strategy is if you've got a lot of capital, if you're rich, to put it simply, you might play these stocks a little bit differently than somebody who doesn't have much capital. So somebody that may only have $100 extra, or $200 extra, or $50 extra, they I think getting into these stocks is equally helpful to the low capital investors or the high capital investors. But what you do with your gains, and how patient you are waiting for the type of gains with some of these stocks, I think has to be played, or should probably be played, a little differently. So I wanted to make this video to show a strategy that I think is very helpful for people who have relatively low capital but want to try and grow it. And hope you all enjoy. So I'll start this slideshow. So I have a picture of Albert Einstein above my office desk. Guy's just so far ahead of his time. His knowledge in physics and mathematics, and just what an inspiration. But a quote that he said, and I wasn't really aware of this till somebody that I enjoyed trading with, is compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So what is he talking about? He's talking about exponential growth. And if you're in in an investment, we want the value of that investment to grow, and we want it to grow exponentially. And the old tried and true standard is, buy a big quality company and invest in it, and over time, if you hold those shares of that company in the market, you're going to have some exponential growth, by a factor of 15 to 30% a year. So if we start, with $1, I'm going to X out here so you can see my cursor. If we start with $1 invested, after a year, that's $1.30, and if we hit 30% on that growth, and after 2 years, that's $1.69. After 3 years, that's $2.20. After 4 years, that's $2.85. After 5 years, you're at $3.71. We'll compound that again by 30%. You're at $4.82. After another year, $6.27. So what this model is showing is exponential growth, and the return expressed in a percent is by the percentage that it's growing every year. But what you're doing with years and years of returns, looking for slow, steady growth, is you're compounding your capital by a certain rate, increasing that number by 15 to 30% a year, and slowly over time, your investment starts to build up. And then once your capital has increased to a big number, by 30% each year, 30% of that bigger number is constantly growing. So this is exponential growth, or compound interest, or compound growth, and that's what we're trying to achieve. And what we're trying to achieve is the percent that that growth is. So each time we grow our capital, we're trying to grow that by a bigger percent. And with somebody who has very little capital, who can't afford to put a lot of money into a stock and wait a long period of time for it to appreciate in value, there's a couple things you can do. You need to be in stocks that can grow faster. So instead of being in funds that might increase from 15 to 30% a year, we're trying to get 75, 100, 200% a year or more. And rather than maybe being patient with some of our stocks that are doing well, show you a strategy that I use myself, and I think is very helpful for somebody with low capital that can compound that growth more frequently. Here's a message I got from somebody the other day. I really liked this message because I think it's super helpful for somebody who thinks, I don't have a lot of money to invest. How could it ever pay off? It doesn't really matter if I have such little money. How can I make money off of that? So this is somebody that messaged me. I posted this stock by Nano-genomics a few times on my Facebook, 3 times actually, and tried to be fairly emphatic but also not annoying in the strength of my recommendation. But it ranged from 30 cents to 90 cents for a few months. And I could see that many fold returns were coming for this stock because of the value of their intellectual property, which I'll talk about maybe in another video sometime. But somebody took the recommendation and they put $100 in it. And they're just reading their message. They totally forgot that they even had the Robinhood account that they put $100 in. And this was their reaction once they found out. Oh God, I put $100 in that stock, and I said, $100. You bought it at 30 cents, so it's worth like $2,000 right now. And actually, it may be a little more than that. It's trading over $9. If you're still holding that, it's worth about $3,000 right now because of the rapid growth of this stock. And it really excites me because this is the audience I'm targeting. I'm trying to help people who may not feel like they're grow their capital quickly. So I took these graphics. I made a fake Yahoo Finance account, and I took every stock I posted on Facebook over the past 30 days or so. So I went back to December 23rd, and at some point or another, either in a Facebook message or some pictures I shared of filters on Morningstar Premium, this is every stock I posted. So what I hope this shows you is we've got 38 stocks, 33 of them have profited, one is exactly even to the penny, and 4 of them are down. And nobody can bat 1,000, but I'm really trying to pick some stocks that I think are very close to a bottom, and get people in something that's going to go up, hopefully go up very fast. They're not all going to go 6-7 fold within a couple weeks. But you can see the rate of growth here was pretty impressive. And there's a couple reasons that happened. One of them being end of the year selling from probably from some hedge funds and some people that were trying to sell and harvest some tax loss. So that really made this industry and market cap of stocks really relatively cheap to at any other point in the year. But also these stocks they're all beat up, and that's my goal, is to find stocks that are beat up, not what's flying high right now. So if you would have bought $10 or approximately $10 in all of these stocks, or just bought one share of the stocks that were priced above $10, the math, well, I think it ended up being $400 something you would have spent, and you would have made $176 on that in a month, which is 40% return. And for comparison's sake, the S&P 500 returned 3% and change over those past 30 days. Some of the NASDAQ small cap biotech index returned 1% and change, and the S&P 500 the entire last year made 16%. So this is an aggressive strategy, one that I believe in can produce gains pretty fast. But again, what we do with those gains is going to be variable depending on how quickly we need that capital to buy something, or how patient we can be with the gains. So, one of the strategies that I developed, and I do some of this for myself, and I think it's something that the lower amount of capital you have, the lower you can afford to invest, you've really got to do this. So I call it the shuffle. So we're going to do the shuffle. So we're going to take stocks that are doing super well and that have maybe become fairly valued, or less discounted, so to speak. So, Bionano, my favorite stock of all time, I sold it, and I've encouraged some other people to sell it. This is a company with phenomenal intellectual property and technology. They are, if you're diagnosed with cancer, or you are having a baby via in vitro fertilization, or you're having some testing of your fetus if you're pregnant, or you're having some genetic testing, something that's done is called cytogenetics. So actual visualization of the chromosomes in those cells. So for instance, my wife and I were doing in vitro fertilization. We had 31 eggs that Kelsey, they were able to harvest from Kelsey. I gave my sperm sample, obviously, which was a very low quality, and one of the reasons we had to do IVF. 26 of those 31 eggs fertilized. Most of them were not compatible with life because of abnormal chromosomes. So you should get 2 sets of 23 chromosomes from mom and dad for a total of 46 chromosomes. And those are the very big pieces of DNA inside the cell. So these chromosomes need to be looked at in certain prenatal screening. in vitro fertilization and in cancer. They make a massive impact on treatment options and prognosis in multiple cancers. So currently this process involves incubating cells and a several day laborious process of lab workers isolating these chromosomes, photographing them. And this Bionano Genomics has a machine called SAFR that's able to map the chromosomes of these cells using light. So optical mapping of chromosomes. This company was worth 20 to 40 million dollars, and the annual cytogenetics market is over $1 billion and growing. And it was just easy to see they have the best product in the world for doing cytogenetics. They can do it cheaper, faster, and more effectively than the current standard methods. This company is worth over $1 billion, period. So it was very easy to see as a hematologist, oncologist, the property of this company, even though they weren't making revenue, even though they're flying under the radar, dirt cheap. Property of this company is just worth so much more than the market cap of the company was reflecting. So I told everybody, you're going to make 10, 15, 20 fold on this investment if you just have a little patience. 9 months later, 2,000% gains or more for people. So anyway, this company is now valued at about $2 billion, and they don't have a lot of revenue yet. They're just developing their technology. It's going to take years to take over that market. But the market has realized what this company has in terms of value. Morningstar thinks it's trading at a pretty fair value currently. So I sold the stock, even though it's my favorite ever. That this company has already made huge gains for us. The market cap is over $2 billion. My hope was to own this until it's worth more than $1 billion. Past that point, I can't really understand. I don't know business. I don't know economics that well. I can't really understand what kind of growth expectation I have from $2 billion upward. But I could easily see $20 or $40 million valuation is insane, and that there would be short-term gains of several fold to get to $1 billion or $2 billion valuation. So what I'm encouraging people to do, sorry that was kind of an aside there, is take the gains from this awesome investment. Or there was another I had listed, Jounce Therapeutics. They're getting pretty close to fair value. It's only 19% discounted. Bionano is fairly discounted, and move those gains, shuffle that capital into something that's more undervalued. So I'm kind of going to go to our filters, which I suggest everybody make their home base. Again, these are free. This is free access to Morningstar Premium that is available through your public library. Again, and you can look in whatever industry you want, but I stick to healthcare because that's what I know. So we're running these filters, and hopefully we don't get frozen here for too long. Let's try again. So we're gonna look at healthcare stocks only, and then we're gonna search only market cap less than a billion. So in millions, that's 1,000. So we're going to put 1,000, and we're going to make less than or equal to as our market cap filter. Sorry guys, internet's a little slow today, I guess. And then the last thing we're going to do that I think is most important is put in our price to fair value ratio. So we want stocks that Morningstar thinks are too cheap compared to what should be the fair price. So I stick with 0.7 or less on that ratio. And by running these filters, we're going to get a manageable list of stocks that we can pretty easily sort through. Okay, we're back on our filters. So then we're going to run these filters, and on the view I'm going to change that to Morningstar rating, and I love this tab right here as price per fair value. So when I say doing the shuffle, what I mean is we're going to take gains from companies that have achieved a valuation that's closest to what is fair, and take those gains and reinvest, sell the stock, reinvest into companies that are more undervalued, that have potential to grow faster. And I've showed a few videos on this, but the stocks that tend to be at the top of these filters do really well. Morningstar is in the business of helping people find value in the stock market, and I've bought stock just because it was number 1 or 2 or 3 on this list. And last week I bought one with the ticker BBI, and it was felt to be 50% undervalued. I bought it. It's gone up 18% or more in just 1 week. I can't even remember what the company is. And I'm not necessarily suggesting you blindly do that, but there's a lot of help here for you that's free through your public library. Would normally be a very expensive tool. But what I'm suggesting is that if you have low amount of money you can invest and you can achieve gains quickly, don't be afraid to sell that stock and realize those gains and then reinvest it into something that's really down in the dump. So this is a stock, BNTC, that's been near the top of these filters for quite a while. I looked into what they do, was pretty impressed by it, and I see several fold long-term potential in this company, and short and intermediate term potential. It wouldn't surprise me if the stock went up 5-fold in a year or more. So I'm putting my money into this stock, which is already undervalued per valuation from Morningstar. It's among the most beat up stocks in the sector that I'm investing in, and I'm taking gains from other stocks that are less discounted, or maybe even they get to a point where they're overvalued, selling those and buying what's beat up. So you call that the shuffle, and it's a great strategy for investors that are really trying to have multiple compounding events as quick as possible. I tell my friends, some of these stocks, I might be holding because I think they're going to go up 20-fold, but if the stock pops 15, 20, 30% in a week or a month, there's absolutely no harm in taking huge gains that happen that quickly and then using it for monthly needs, or reinvesting and compounding that so that your capital can grow fast exponentially. And once you've had a number of compounding events and you're really starting to build your capital, you'll see that the absolute value of your capital is growing so much faster. Hope you all enjoyed, and have a great week. And I'll be dropping some more videos on some stocks that I like, doing a little searching, using these filters to see if we can identify some stocks we like, and I'll be posting those this weekend as well.